Stop. Don't get your freight broker bond until you listen to my interview with this freight broker bonding expert. We answer 7 key questions that you need to know before getting your freight broker bond. This video could literally save you tons of wasted time and thousands of dollars. My guest today is Dakota Rhea from Jet Surety. Welcome, Dakota.
Thanks for having me on, Dennis. I appreciate it.
I'm excited that you're here. Listen, really quick, Dakota, if you could do me a favor, just quick introduction of yourself, and then we're going to dive right in.
Yeah, absolutely. I'm the program director for freight brokers at Jet Insurance Company, or Jet Surety. We're a direct provider for the surety bond, so we kind of cut out the middleman and have good control of our prices and, all of that fun stuff. But I've been in the industry for coming up on 3 years now. I've been with this freight broker unit the whole time. I was actually part of its initial startup and setting the procedures and underwriting standards and all of that fun stuff. So I've dedicated a lot of my time to this company and helping build up this program and a good understanding of the surety bond.
Yeah, and you jumped in, it seems like, where there's been a lot of changes and a lot of things going on with the FMCSA and changes inside the industry and particularly inside as it relates to the bonding industry. And maybe we'll touch on a little bit of that today. But before we jump in, okay, for the newbies in the room and for the people that are really just starting out, which we usually have a fair amount of them, tell us exactly what a freight broker surety bond is and the purpose of it.
In its most basic form, the surety bond is a financial guarantee that you as a broker are going to pay the carrier that you've hired to move the load. That's the most basic definition I can give.
Yeah, that's the perfect definition. It's funny because I get a lot of people new to the industry that think it's somehow tied to cargo insurance or tied to shipper, the load that the shipper gives you. And I tell them time and time again, it's just a guarantee of payment to the carriers that you use. That's really what it comes down to. But it is a requirement, right?
Oh, absolutely. Yeah. Can't get your broker authority without having that $75,000 limit covered in some way, whether it's by the surety bond or the trust fund. But yeah, you have to have this to be able to move those loads.
Yeah. And so let's address the elephant in the room, which is something you just referred to, which is the $75,000 bond, right? This is what scares everybody. This is what a lot of people don't understand. Talk to us about what a $75,000 surety bond is versus $75,000 in cash, which is what a lot of people think they need in order to get started.
Yeah, so you don't have to have this huge asset base to be able to start up the business. The surety bond is going to act a lot more like an insurance policy where you pay a certain amount of premium per year or per month, and you're covered by that or for that $75,000 limit by the surety provider. So it's going to, reduce that upfront payment. You're not going to have to fork over $75K, have it sit in a bank account where you can't utilize it for your company to help out the cash flow at the start of your business. You can actually pay a low amount per month to be able to get your business going a lot sooner.
For those of you that have taken a look at that $75,000 requirement and think that you need a $75,000 cash bank account or to put up your house, that's not necessarily the case. A lot of this is based upon other factors. And like you said, it's more of an insurance product where you're going to pay a percentage of that premium, right? You're going to pay a percentage of that 75. You're not going to pay the whole amount, correct?
Correct.
Okay. So let's talk about a little bit about how much bonds cost. And I know there's a wide range there, but dive into that a little bit about what determines cost and what you're seeing in regards to cost these days, because again, costs go up and down depending upon a lot of different variables in the market.
Yeah, absolutely. And it's not just the cost of the bond that matters anymore. You have a lot of these surety providers now that are requiring 15, 20, 25,000 in collateral as well, on the side of that premium. So the simplest answer, you're going to pay somewhere between $700 to $10,000 in premium for the surety bond. Some things that are going to affect that are the personal credit scores of the owners, your experience in the industry, how long your business has been active. There are some cases where personal financials or business financials will be requested as well. But the better the application, the lower the credit score, the more cash on hand you have to start the business. The longer your brokerage has been active, all of those things are going to help you get a lower rate when putting in those applications to the providers.
Gotcha. Okay. So here's the question I get a lot, because there's people that are, for whatever reason, maybe they've got some dings on their credit. Maybe they've got a past bankruptcy. Maybe they've got a foreclosure. Maybe they've got some dings on their credit, and maybe they've got a lower credit score. They're in the high fives or 600s, and their credit isn't perfect, but they're working on it. Can someone with that type of credit qualify for a bond? And if so, what do you think they're going to see in this market just as a range?
Absolutely. They can definitely get a surety bond. There's not really a credit minimum, at least, for most of the surety providers that you apply with nowadays. You could have even, a sub 500 credit score and still have a chance at qualifying for a green. So as far as pricing goes, once you get below that 600 threshold, you're going to start looking more into the 5, 6, 7,000 range for the bond. But of course, if you've been driving truck for 5 to 10 years, or you've got some good industry experience as a freight agent, don't stress about having the low credit scores, because it's not the only factor that is going to affect the rate. You can still keep it down as long as you've got some good industry experience.
That's good to know. The industry experience does play a role, especially if you have that ding credit. So if you do have a higher premium, do some providers, including Jet, is there the potential where it would be some sort of payment plan, or is that something that's sometimes it's required all up front, or can you guys piece it out over several months? How does that work?
Yeah, Jet's actually one of the people that offer monthly payment plans. It's not a very common thing in the industry, in surety in general, actually. Most of the plans that you're going to see are based off of 1 or even 2 year terms. There are some companies that offer quarterly payments. There are, Jet offers monthly payment. It just kind of depends on the specific surety provider that you go with. But with us specifically, even in the lower credit tier ranges, you're still going to have that monthly payment option. So you're not forking over, $7,000 to $9,000 at the very startup of your business.
Yeah, I love it. And just so you guys know, I probably should have mentioned this at the top of the interview here. The reason why I'm having Dakota on here today is because all the changes going on in the freight brokerage industry, and particularly in the surety bond industry. I reached out to Jet, started a conversation, and we now have a formal relationship where we work together in partnership. And the reason why that is because many of my students from Freight Broker Bootcamp, obviously that startup program, their next step is to move into bonding. And I wanted to provide them some better options, right? Some better pricing, some easier ways to maybe qualify, right? And so I reached out and had numerous conversations, did a lot of research. And so we've now partnered with Jet, and we're going to make a special offer to you at the end of this where you guys can get some more information about this and even file an application and have a conversation with Dakota and his team over there at Jet. Hold tight on that, because there's definitely, you want to get these questions answered beforehand, which will save you and everybody else a lot of time on the back end. Okay. So here's a question that I get a lot. And even I didn't fully understand this when I first got started back in 2003. So you get your bond, you get your authority, you start moving loads, and something happens. And for whatever reason, a carrier files a claim on your surety bond. What happens from there? What is that? Explain that to me, the step by step. Give it to me like I'm a fifth grader.
I can only attest for how we handle claims. Every provider is going to have a different strategy to it. Some will receive the claim, pay out right away, and then say, hey, you need to pay us back to keep your bond active. We take a different approach. When a claim is filed, we are always going to contact the broker first thing. We're going to get their position on the matter, give them a chance to respond to the claim, see what their situation is, see if we can't handle it between the broker and the carrier without us becoming, financially involved in the situation, because no one wants extra steps in the process. It becomes a hassle. So we try to solve it between the broker and the carrier. There are quite a few different things that a claim can be filed for, but basically there's going to be an investigation that happens if the claim is valid, if the claim is not valid. If it is, the broker is going to, pay the carrier based on the contract that hopefully the carrier completed, if the investigation is thorough. If the claim is denied, it's usually not much of a sweat. If those claims start to rack up, then there might be a conversation at that renewal, but there are a lot of illegitimate claims that are filed, whether it's, the truck driver got into an accident and the load was damaged, claim is filed. That's not something the bond covers. The carrier canceled the load or was late to the delivery site, and now there's an excess charge on there and there's a discrepancy. That's not, something that the bond typically covers. coverage. So there's a lot of claims that are filed that are not going to affect the bond at the end of the day. Don't stress about it. Usually not that big of a deal. But if something legitimate is filed against your bond, make sure to handle that quickly, because at the end of the day, your authority is based on you handling that in a timely manner.
Yeah, and just to kind of reel it back a little bit, remember the objective of the surety bond is to protect and guarantee payment to the carriers, okay, from brokers. And so if there's a legitimate claim, it's the surety bond companies, it's Jet's responsibility, it's Dakota's team's responsibility to make sure that that carrier is made whole. And so if they have to pay out a claim, then what's going to happen at that point, and correct me if I'm wrong, then you as the broker are going to have to repay the surety company, right, to make up for that delta that they paid. If there was a freight bill that for whatever reason didn't get paid and they have to pay out, you're going to have to pay that back, right? So it's not like a homeowner's insurance where you file a claim for some water damage and then they write you a check for $11,000 minus your deductible, and then you get to keep the money and do whatever you want. But it's a little bit different, guys. This is a commercial business environment. It's different. That's why it's kind of like an insurance policy, but it's really not. It's a surety bond. Okay. Did I state that correctly, Dakota? Is that correct?
No, you hit the nail right on the head right there. That's different when, if a claim is filed in insurance, they say, oh, your premium went up, or, this claim was valid, but we can still keep you on the policy itself. If a claim is filed against your bond and there is a payout that happens, there's a large chance that you're going to, that bond is going to be canceled. You're not going to be able to do business, and you're still going to have to repay the surety provider for what gets paid out. So it really is important to handle those claims appropriately.
Exactly. It's important because without that bond, you have no broker authority. If you lose your bond and they're responsible to notify the FMCSA, and as soon as the FMCSA finds out, then they're going to make your broker authority inactive. And then now you don't have an active broker authority. Now you can always reestablish a bond and you can get it activated again, but it's important. That's the reason why we're here today. We want to make sure that these questions are all answered because there's a lot of mystery. There's a lot of, nuance here when it comes to what is a freight broker bond? How does it work? And so I want to talk for a minute here. You've been in the industry for a few years. Jet is obviously one of the leaders in the industry. And, there are a lot of guys, a lot of providers I've seen in the last over 20 years that I've been in the industry. I've seen a lot of providers come and go. We even had a conversation about that, not long ago. My question to you is, what should somebody look for in a good surety bond provider? What are some characteristics? What are some services? What are some things that a good bond provider should provide that maybe some of the others might not?
It's a great question. Mainly, a good indication of a solid surety provider that knows what they're doing and has a good understanding of the industry is their underwriting practices. There are quite a few surety providers that will open up the MC number and look at the years that it's been active, look at the personal credit of the owner, and then toss out a rate. And it could be as accurate as throwing darts against a wall because there's so many other indicators that you look at to assess the risk of a business, especially in the freight industry. You've got there are tools where to see how well carriers are paid. You've got, carrier 411, carrier okay, things to help you validate the risk of the business that has applied to your provider. So you're looking for things to be done, close to home. If claims are handled in-house, that they're sitting right next to the underwriter that applies for the bond. So they're both going to be up to date on the risk of the industry and kind of ping off of each other of what to look out for. You want someone who, you call the business, they're going to respond right away. They're going to pick a phone. You don't want to get into this mess of automated chats or automated anything because that's where, the people who are good at scheming or fraud in the industry they're going to find their way to worm through. So that human interaction, that good understanding of the industry is a good place to start in looking for a solid surety provider who's going to be around for a long time.
And we talked about it already, but I think this makes sense to kind of add it to the list, which is somebody that has a claims process that's more broker friendly, right? Because you can have, if there are surety bond providers, I assure you, I know some of them out there, that if a carrier files a claim, there won't be an investigation. They're just going to pay the claim. And then they're going to let you know they paid the claim. And then you're going to have X amount of time to repay it, or they might just cancel your bond. Okay. So that claims process is important. And Dakota talked a little bit about how Jet Surety does does that. And so I think that would be another part that you would want to understand and maybe ask those questions, whoever you decide to go with or whoever you're currently with, if you already have a freight broker surety bond. Is that a fair statement?
Oh, absolutely.
Yeah,
Absolutely.
cool. All right. So I think we've answered some really good questions here. The biggest question and the last question we're going to answer, and then we're going to jump into Q&A. So hold tight, write down any questions you have. Hopefully you've jotted them down along the way. But let's talk about the really quick, simple step, the simple process that people can go through in order to get their freight broker bond or to at least get more information about it. I'm going to put a URL up on the screen here, but you can talk about it to get started.
It really is a simple process. It's just a matter of having your DOT and MC number from the FMCSA, having your personal information on hand, your first, last name, and social, which you should have at all times, and just having some good contact information, phone number, email. That's really all that you need to start the application process. There are some things that might be asked for along the way, like proof of ownership for the company. So, have your articles of organization or your articles of incorporation on hand, just to make sure that we're selling the bond to the right person. In some cases, have a personal financial statement prepared. You can have things ready on hand to make that process a little bit more smooth and have some quicker responses prepared. But in essence, just bring yourself and your business. It's really as simple as, 2 minutes, a couple clicks, and should have some quick responses with some good prices.
So if they were to go to the URL on the screen, freightbrokerbootcamp.com/bond, and fill that out, it's going to send you and your team the form and the information, and that's going to start that process. From there, if they've provided the correct information, what's that process look like, and what's the typical timeline for something like this for them to be able to get a bond secured, assuming that the moons line up?
Yeah, as long as we get good responses from the applicant and they're, on time with answering questions, pick up the phone when we call them, we can typically have a bond issued and filed to the FMCSA within a couple of hours. It's a pretty quick process. So,
wow.
If there's some other things that haven't lined up yet, like the LLC isn't formed or they're shopping prior to applying to the FMCSA for that authority, obviously those timelines are going to be stretched out a little bit.
Of course.
Time. But if you've got everything prepared, we're going to have that bond issued and filed to the FMCSA by the end of the day. So once the bond is filed, that's usually the longest waiting period that you're going to have until you can actually start doing business, because the bond itself does not automatically activate the authority. The FMCSA has to process the submission, make sure everything lines up, and then activate it. So that usually happens around the 7 to 10 day mark, give or take a couple of days. They say up to 3 weeks, but in our experience, usually happens around that week mark.
Perfect. So listen, that draws you guys a picture. If you're curious about, maybe you're shopping bonds right now before you file your application, or maybe you've already filed your application with the FMCSA and you guys want some information from a company you can trust. I'm fully endorsing here. I'm hanging it out here, guys, just so you know. If this is something I believe in, I wouldn't have them on here if I didn't. You can go to freightbrokerbootcamp.com/bond, fill that simple basic application out. Someone from either Dakota or probably someone from his team is going to reach out to you, and you guys can take those steps. And I really appreciate you being here, Dakota. It took a little bit of work to get here, but it seems like things have worked out.